Welcome to the Explainer. Okay, let's dive straight into the absolute most talked about asset in crypto right now, SKYAI. I mean, it is dominating headlines, it's flooding our social feeds, and it's pulling in just massive amounts of speculative capital. So today, we're unpacking exactly why.
Now, let's talk about 1,600%. That staggering figure represents the massive 24-hour volatility triggered by SKYAI's recent spot listing on Bitget. It instantly hooked the entire market's attention. When you hear a number like that attached to a single day of trading, you just know you're looking at an absolute magnet for momentum traders.
But here's the thing. That momentum didn't just happen overnight. It's actually the peak of this wild parabolic rally. I mean, we're talking a 1,075% gain over 3 months, 754% over the last 30 days, and a blistering 234% in just the last week alone. This explosive growth has driven the token's market cap well past $629 million.
So, decoding the protocol, what is SKYAI actually building? To really understand this $500 million valuation, we need to strip away all the hype, look past the flashing green charts, and examine the actual technological foundation going on behind the scenes.
The really crucial point here is that SKAI isn't just another meme coin. No, it's an Extended Model Context Protocol, or MCP for short. Basically, in simple terms, it's a multi-chain routing layer designed to aggregate massive amounts of blockchain data specifically for AI agents. Its core purpose? To feed smart, on-chain knowledge directly into artificial intelligence. It's trying to solve a major data bottleneck in the AI space.
And the sheer scale of this operation is what's truly interesting. Get this, they are already aggregating over 10 billion rows of data. Right now, they support the BSC and Solana networks, but they have a planned multi-chain expansion to Ethereum and Base coming up. Plus, they're launching a decentralized data marketplace where developers and providers can actually earn revenue by listing their own servers. The really big milestone to watch, though? May 3rd, 2026. That marks the final testing of their highly anticipated MCP hub.
All right, moving on to the bull case catalysts and sector hype. With that massive utility in mind, let's explore what is currently rocketing this token to new all-time highs, and frankly, keeping buyers aggressively stepping in.
You can really see how this timeline builds into a perfect storm for price action. First, on April 30th, the Bitget spot listing debuted, injecting massive liquidity and causing a 36% surge all on its own. And then that rolled perfectly into the May 3rd MCP hub testing announcement. That was a massive fundamental trigger that pushed prices aggressively right up into the 64-cent range by May 4th.
We also just can't ignore the broader market narrative here. Speculative capital is flowing heavily into AI tokens right now. It's like whenever the broader tech and crypto markets pivot toward artificial intelligence, projects like SKYAI find themselves riding the absolute crest of that wave. This capital rotation acts as a huge tailwind.
But wait, let's look at the warning signs and whales. A bit of a bearish reality check. Because, before we get way too swept up in the FOMO and all those promises of AI integration, we absolutely must look at the glaring red flags flashing in the technical and on-chain data.
It's a classic clash, really. You've got this promising foundation-backed project on one side, violently colliding with a technically exhausted, overbought chart on the other. The AI narrative is strong for sure, but as we know, gravity in the financial markets is often much stronger.
And when we dive into the technical data from CoinLower, wow, the warning signs are impossible to ignore. A 14-day RSI near 85? That screams extreme overextension. Historically speaking, this means a sharp 20 to 30% corrective pullback is highly probable, as those early buyers start to take their profits. Plus, we are sitting right at a key resistance zone around 63 cents. If momentum fails here, well, the primary support level sits all the way down at roughly 15 cents. Think about that. That represents a massive 75% downside risk.
Now, adding a deeply human element to this technical risk, prominent traders are really sounding the alarm regarding token supply. Over on Binance Square, users are issuing severe warnings about supply manipulation. One trader pointed out that just 73 wallet clusters are controlling nearly 300 million tokens. They bluntly stated that this main pump is purely a whale-controlled solo act.
To put that into perspective, let's talk about a very tiny number, just under 4 cents. That is the estimated entry cost for those whale wallets. Because they got in so incredibly low, they're sitting on returns of nearly 500% right now. The danger here is pretty obvious, right? They could dump their massive holdings onto retail buyers at literally any moment and still walk away with just astronomical profits. And because of this looming threat, social sentiment is completely fracturing. It's become a fierce battleground out there. On one side, you have your momentum chasers aggressively going long on the AI narrative. But on the other side, contrarians are calling it a trap, straight up urging traders to aggressively short the token at these highs.
Okay, moving to the future outlook and long-term price predictions. So, with the whales circling, the retail market battling it out, and the tech continuing to build in the background, where exactly do long-term prediction models say this asset is headed?
Well, if the project actually delivers on its valuation, and, if it survives those short-term dumps from early whales, scenario-based research from CoinLore projects some pretty steady long-term growth. Their model suggests stabilization around 72 cents in 2026, then steady growth up to $2.66 by 2030, and even a theoretical ceiling of $16 by the year 2040.
But ultimately, your biggest takeaway from all of this should be that long-term survival entirely depends on execution, not just hype. The developers absolutely must successfully launch that MCP hub, finalize their multi-chain expansions, and prove there's actual real-world adoption for their data marketplace. Because if they fail to deliver on that, well, that speculative capital will rotate out just as fast as it rotated in.
Which leaves us with one final high-stakes question to ask yourselves before diving headfirst into the hype. Can SKYAI actually transition from a purely speculative AI play into a genuinely utility-driven platform? Can it evolve from a volatile, whale-dominated token into the real backbone of the decentralized AI economy? The answer to that question won't just define the future of this project, it'll decide who gets rich and who gets left holding the bag.